Hey everyone, January didn't quite meet our expectations. We saw a lot of action in the crypto market, but we're ending up back where we started this year, with Bitcoin at around $88,000. Meanwhile, gold and silver have surged and are still climbing. I'll be chatting about how to jump on this rally with Oliver Michel from tokentus in just a few minutes. Great to have you here, Oliver.
Hi.
Since you and Stefan Schwenk have caught up on the latest jungle camp news and everyone's in the loop, and maybe I'll join the conversation someday, let's focus on what's really important: investment opportunities, specifically the crypto jungle. Yes, the crypto jungle. Like I said, I think everyone had a different vision of January, and now as we near the month's end, we're back at square one. Gold and silver are still climbing like crazy. Who would have thought, right? I didn't. Do you see any glimmer of hope to jump on this rally?
Well, Johanna, over the past 10 years, Bitcoin has outperformed gold in 7. I'm not even going to dive into the outperformance percentages. But I don't want to stir up jealousy because I'm really happy for anyone who invested in gold and silver and is experiencing this. Historically, gold and silver tend to lead, slightly ahead of Bitcoin and cryptos. If history repeats itself, we're in for a good ride, and we can hope the gap between our cryptos and the top precious metals will close.
Some folks seem to find it pretty funny. Yeah. This week is packed. We've got the Fed meeting, and last week we got economic data that should, could, and might sway the Fed chief's decision. This data not only touches on the economy, but also on inflation. Let's dive deeper into that. We've already discussed this on our Telegram channel, plus we need to check out which data might be important for the near future.
Yeah, we had the last FOMC meeting a month ago. Yeah, rates were cut by 25 basis points, and right after, it was clear that tomorrow's January meeting on Wednesday would certainly not lead to further cuts. And these numbers, 95%, show things staying the same. We've been tracking this for weeks now. Nothing changed since last week regarding the next cut, which is expected. After a new Fed chair is appointed and possibly another cut by year end. We've always said we're not focusing on that. What's key is tomorrow, January's meeting, holds no surprises, even with all the news. In the past month, the job market has weakened, which we know, and inflation has stayed about the same, which isn't necessarily bad. We had the second GDP reading last week. The first reading was 4.3%. For the third quarter of 2025, it's been bumped up to 4.4, which is awesome. We got the BC inflation data for November. You'll see 282828 for previous, expected, and actual, and the same in the core area, just like I mentioned before. What comes from the official side, from the bureaucratic side, is at a certain level, and I've been watching Truflation more often now. It's an independent service giving its opinion. Last week we were at 1.57%. That was quite something, as we noted that we are well below 2%, and on the 26th, last night, we were at 1.2%. So if those figures are right, it suggests, if that's correct, the inflation is pretty well, eigentlich ganz gut, under control.
Im Griff.
Way off the
Wir hatten eine Anmerkung
in the comments. Someone pointed out that inflation still means rising prices, just not as fast when inflation drops. He's right, but it's easier to just say prices are falling.
We've got quite a bit on the agenda this week. We, aside from tomorrow, which is likely to be a non-event for the Federal Reserve's rate meetings, I doubt Jerome Powell will put much focus on trueflation in his decisions. At least that's how these decisions seem. But
This is his first session and public appearance since he was charged.
yeah, but that's not going to make him lower interest rates.
No, but I'm curious to see if he'll be bold or play it safe.
Eher defensiv.
I think he'll stay defensive.
So nach dem
Like
Motto,
he's
ich
saying,
meine,
I don't care, I'm leaving soon anyway. Or something like that. We'll see.
This week, we're still focusing on the big US companies' quarterly reports with figures from Microsoft, Meta, Tesla, and Apple on the horizon. These tech giants, called the Magnificent Seven, have been driving the tech rally, which boosted NASDAQ. This rally depends on a few key players, and if these companies don't deliver, it will significantly impact major US indices. So far, the reporting season in the US is steady with few letdowns. The big question is if these tech giants can keep up. Plus, we've got inflation data on Friday and the ever-looming issue of the US budget. January's almost over and the budget is only partially sorted until the end of the month, risking another shutdown. We recently had the longest shutdown in US history. Do you think another one with similar fallout could hit the markets?
Sure, it would definitely have an impact. It depends on how long it lasts. You just brought up that it's a partial one. There are one or two things we need to agree on. Homeland Security, the money, rounding up illegal immigrants and sending them back. How's that going to be paid for? That's a sticking point. And if that can be sorted out, then I think we might still turn things around. But you already pointed out the shutdown. 77% and up at polymarket betting sites. So we can be pretty sure that there'll be a shutdown for now, and that'll have consequences. Let me name one consequence. We've got our Clarity Act. The moment the shutdown hits, everything gets dialed back, and the Clarity Act has already been put on hold because of a previous shutdown, or like they say, it got shelved. And that might push the Clarity Act back, but we'll dive into that later. The workaround here, Johanna, is that all key positions in the US are gradually being filled with crypto supporters. We've got a Fed chair, a new CFTF chair, and we're expecting the BlackRock CIO, Rick Reeder. Possibly the new fat share. And again, Polymarket says there's a 50% chance. This is the guy who said years ago that Bitcoin would be a big deal in the financial world. So even if the Clarity Act doesn't pass, at least all the key and strategic spots are filled with crypto supporters. So you can say, okay, we're on the right track for sure.
You mean the SEC chair, not the Fed chair, the crypto enthusiast with the new roles?
Nein, der CIO.
Becoming the new Fed chair.
He'll be the new Fed chair, but you mentioned earlier we've got crypto fans leading various CFTCs and also at the SEC.
Yeah, exactly.
Das heißt,
So Gary Gensler's out.
Genau.
His replacement is totally into crypto. The same goes for the newly appointed CFTC chair, who is like the equivalent on the commodities side. If we still have the Fed chair, the US government is basically pro-consumption. That's something you can definitely take advantage of. The icing on the cake would be a Clarity Act that's approved pretty quickly.
The cherry on top.
Exactly, yep.
But there are still risk factors like the simmering geopolitical hotspots and tariff disputes. Right now, a huge fleet is on its way to Iran from the US to manage the heated tension. there. It's not there yet. And if the US starts military actions in Iran, it'll likely have a big impact on the markets again. And we still have the tariff issue, right?
At least in the short term, we'll see political stock markets. It will definitely make an impact.
You'll notice it on the stock markets. It will definitely happen again, depending on how quickly and successfully it plays out.
Greenland was quick. Greenland was quick.
Yeah. A trip to Switzerland and you were there.
Exactly. But for sure, Greenland without military involvement, thankfully. And yet the tariff issue is back. We're talking about 100% tariffs against Canada. It looked like Canada was cozying up to China, but pretty soon after threatening tariffs, they pulled back because 100% US tariffs would be a disaster for Canada. The bottom line is that interest rates aren't moving for now, so tomorrow's going to be a non-event. But this doesn't seem to bother the big US indices, quite the opposite. The Russell 2000 kept climbing to 2,700 last Thursday. We mentioned this already in our Telegram channel with a chart, so folks can get updates faster there. We're in the final target range for the Russell now. Does it need to go higher, or is this enough?
Can't say how high it'll go. When a surge like this happens, just like we're seeing with gold and silver, this can lead to overshooting, and no one can say, how long will this keep going? What really matters to us are these two green arrows we've been tracking for weeks. We're looking at the Russell's daily chart. There's the upward trend. We see the 21st, all-time high, which was key for us. Then we said, all right, the first move happened. Then there was a correction. And now we're basically in this final move. Right here, we see the Friday was red. That was the Friday after Thursday. I marked it and you mentioned it earlier. We hit a new all-time high above 2,700 points, a level we've been eyeing for weeks and months. The idea was to break that mark. Everything beyond is just extra. Naturally, on Friday, after reaching such a high, there was some profit taking. It dipped, but as you can see, the upward trend resumed on Monday and today, Tuesday. So with that perspective, what we've been anticipating for months was achieved in 2007. Check the schedule. We've often said that this sets a good stage for the growth of cryptocurrency. It's not the exact moment it hits 2007 that cryptos shoot up immediately, but there's usually a delay. However, it's a very clear sign of a liquidity shift towards risk assets. This is getting more pronounced, and the final all-time high is somewhere in this range we're moving towards. As you mentioned at the beginning, interest rates probably won't drop in the coming months, but the Fed's liquidity boost, which we've often discussed, seems to be taking effect here, benefiting risk takers like the companies listed in the Russell. That's why we see that nice second green arrow pointing up.
Right now, it doesn't seem like there's a hold rating for the remaining US indices either. After the whole Greenland incident, which, as you mentioned, was quickly brushed off in Switzerland, we saw a minor setback, but the major US indices are still soaring. We'll have to wait and see how the earnings season unfolds and its impact.
Yeah, let's hope for the best regarding the earnings season. We don't want it to mess up this nice chart. I'll kick off with the DAO. You can see this long red candle here, which was a bit alarming, suggesting could the momentum stall? That was during the Greenland issue before everything picked up. Again, you can see it here and here. So the dip was a bit nerve-wracking. Here we had the green arrow showing the latest all-time high. I've said multiple times that the DAU will definitely aim to break the 50,000 point mark. It'll surpass that. The S&P has also climbed back up since Greenland Tuesday. Here, the last all-time high was the week before last, just like the DAU. 7,000 points are definitely a magical number that will be surpassed. We were at 6,950 last night. They'll reach it, and the final target will be up here. You can clearly see the Nasdaq's upward movement, and 786 retracement over and over. So these retracements matter. That's the 1, that's the 0. It dips down and then climbs back up to the retracements, getting rejected once, twice, 3 times, and now it's back. So from that perspective, I'll just say, they're breaking through now. As it says here, reaching the all-time highs in our major US indices, including the Russell. I believe this is, I emphasize now, key for our cryptos to break out. And for the Nasdaq, the final target is somewhere around 27,000. We're still around 25.7, but the Nasdaq will catch up pretty quickly with good news expected this week. So, what's going on now is new all-time highs will be set in the coming weeks. And whether these targets are hit will decide if our cryptos can follow, or if they'll crash earlier. If they crash, our cryptos will too. But you know, I'm optimistic. I'm thinking with the current momentum and the US government's drive to be the top economic power, things will really get a boost and take off.
So, no decoupling, neither up nor down.
Yeah. We had it on one slide, 4 or 5 weeks ago. I can't see them all rocketing up, hitting one all-time high after another. And while our cryptos and Russell are smack in the middle of a bear market, that just doesn't line up for me. Not sequence-wise. And I think we covered that a few weeks ago on one of the last slides.
We just mentioned this is a promising sign. The Russell has gained 2,700 points, which is a boost for crypto. Another positive is that the US dollar's strength, as seen in the DXY against major world currencies, is also dropping. We've now hit the target range, indicating that US dollar investments aren't as appealing, giving crypto more room to grow. We're in your targeted range now. Should it go lower, or is this fine?
Yeah, last week we hit the 2,700 target on the Russell. You can clearly see the decline since mid last week. And these two green mini candles are yesterday and today. You can see how it entered the target range between 96 and 97 yesterday, and it's currently right at the top of 97. This red arrow we've been tracking for weeks. Yeah, it happened. It's here, and we're in that range. Of course, it's still dipping a bit. We don't just want to touch the target, we want to hit it squarely. It'll probably move into that lower area over the coming days and weeks. You can also see this counter movement. I want to mention it again. The DX2 is moving up here, and there's a slight delay. We're on the daily chart, and slightly later it goes down. So, a comment asked, now that DX2 is at the target, why isn't Bitcoin moving? Well, it's not like handing a baton from 2:00 p.m. to 3:00 p.m. You can see it. It's falling. And Bitcoin just needs a few more days to catch up. That's exactly what we're expecting, that it will rise in this area, and then Bitcoin will follow with a bit of delay.
Clear red candles like we've seen here usually make an impact or mark a key moment. In this situation, it was a risk we didn't focus on much last year, the effect on the carry trade in the Japanese yen. The Bank of Japan is raising rates, noted in their next meeting, but it's important to mention that for the US, with its high debt, Japan's rising rates can be a risky tool that might hit the entire market hard. Yes, a dangerous tool indeed that could potentially shake the entire market. The Bank of Japan met again last week, which we talked about in our Crypto Telegram channel, and it significantly impacted the bond market.
Exactly, Yvonne. The fact that it dropped so sharply in just a few days is almost a record fall, if I recall, and there's definitely a reason for it. We know that the Americans and the Japanese are closely tied when it comes to bonds because the Japanese hold the most US bonds than any other foreign entity, making them major lenders to the US. Briefly, the Japanese have announced they're raising interest rates. Raising rates signals strength, which should boost the national currency's value. Go up, much like when the Fed cut rates last December and the US dollar dipped a bit. You'd expect the opposite effect now, but what's intriguing about Japan is that rates are up. Yet, the yen isn't budging, it's staying weak. When the yen is weak, large-scale government bond purchases can't happen, and they might even cash out. Plus, as local rates climb, demand for Japanese government bonds grows because is actually more likely since interest rates are rising there. So what does this mean the other way around? The moment the Japanese, for instance, stop buying US government bonds, which means the demand for them drops, the Americans still need to refinance their debt. They have to make US government bonds more appealing. How do you make bonds appealing? By increasing their yield, or essentially the interest rates. So the US is facing a big issue. They need to refinance, restructure their debt, and manage their debt load, all while demand is falling. This might mean raising interest rates on bonds, which is a huge problem for the US. That's why something hasn't happened in ages might occur. The US is thinking about supporting the yen, which is weakening and causing these issues. Supporting means they've asked for a rate check to see the impact of buying yen with US dollars. Just asking for this check from the New York Fed has already stirred things up. You can imagine what could happen if the US actually started printing dollars to buy yen and the effect it would have on the dollar. This will definitely keep us busy, both for better and worse.
I was still listening to you, even though I was checking my phone. Women and multitasking. So, on the 25th, we posted detailed info on the Japanese yen and its impact on crypto insights. You can always scroll back, catch up, and stay informed. We're catching up on Bitcoin now, and I'm hoping this dip to 88,000 USD is behind us. We've chatted about closing a gap before, which should have happened by now. But after breaking out, we're back in the range. So, what routes do you see ahead?
Yes, you're right. That's the range we're working with. From 84,000 to 94,500. That was the spike you talked about. It briefly went above before the situation pulled us back. And yup, there's the Greenland effect here too.
Yes.
And the Greenland effect, or Greenland news, really dragged everything down. The upper gap was closed, but on Tuesday, the lower one closed too. We saw a sideways move, and on Sunday there was a low liquidity Sunday evening dump. When traders aren't around, news like a coming shutdown can trigger a cascade, and it did, but it was undone on Monday because we have a Bitcoin options expiration this Friday, and we know what that implies. This time, market makers are long gamma. That means when Bitcoin drops, they have to buy up to hedge. And when it rises, they sell down to hedge. So, until the 30th, we'll see this back and forth. When the market goes up, they pull it down, and when it goes down, they push it up. So by the 30th, everything will be sorted out. And next weekend, things should be back to normal for a while. We also need to mention that there was a major outflow of 1.7 billion USD from a spot Bitcoin ETF, making it an extremely red day. A lot has happened and a lot more is going to happen. But we are staying in this range, almost right in the middle. You mentioned at the start, 88,000, just like we were when the year began. And of course, here too the same applies. The price could drop again towards 84,000. Yes, because that's how the range was formed. It's been tested once, and it might be tested again. It definitely can't be ruled out. It shouldn't drop below 84. And ideally, if this is the next higher low compared to the previous higher low, we'll see an upward trend. We'll see what happens next. Maybe a test downward, maybe some sideways movement over the weekend. To move upwards, we said the upper limit of 94.5 must be exceeded. And here we see what's really bothering the bears, the weekly SMA 50. We've been under that level for quite a while, several weeks. It needs to be removed. Only then can we reach the 1-0. Retracement range of 678702. We have to get through that before we can continue upward. But one step at a time. We're in this range, so now we need to see how things play out within it. Ranging means
patience.
Exactly.
Let's check the weekly chart again, showing both the bearish and bullish signals so you can see which direction to take. Both sides have their points and facts to back them up. Let's dive deeper into that.
Yes. That's our key chart. The weekly one, showing a bigger picture than the daily chart. It clearly demonstrates that our typical pattern of higher lows and higher highs is still holding up. So at this point, we haven't been proven wrong here as long as we don't fall below this purple line. So we're actually still trending upward. It's holding steady. It's still uncertain if this is a new higher low. We can't say for sure yet. We'll know for sure once we've made it through the retracements in this area, as I mentioned. Then we'll be sure we're on track for a new higher high, and that'll be that. We can then check it off and remove the question mark. So that's the ongoing positive movement. And for me, that's a critical takeaway from this slide, something very insightful. But like you said, we also want to highlight the bearish side. The bearish signals are mostly technical, like the SMA 50. Yes, it's been below that for several weeks. In the whole, you've never gone below a bull market. Now you are, just like during the last shift from bull to bear market. What can't be dismissed is that It's a beer stain that fades downward, ending up at 53, not the drinking kind, but... And then, of course, there's the monthly MACD, which turned red since September. I left that out earlier. Classic indicator for that, it's done. I'm still betting on macroeconomic effects. So, how's the DXY doing? What about the global and US M2 money supply? And how are other aspects evolving that we've really covered thoroughly? Maybe consider the 5-day MACD as a balance to the monthly MACD. We're looking at things weekly here. Mm-hmm. We usually check the monthly chart, but on the 5-day high chart, the MACD is turning green. When that happens, it stays green for 100 days. That's exactly the scale I hope for. You can see the price and RSI diverging here, which we've talked about a lot, to climb this upward path. There's already a slight uptrend visible, fitting nicely with the ranges movement. What I'd love to see, maybe some of you have the gold and silver chart in mind, is this parabolic climb to our target of 140, 150. I've seen some final bull markets with big bull runs. So
that's not it yet.
A bull market hasn't ended yet. So it's reasonable to expect this development, and it would fit perfectly with what's possible before we hit that solid line. But as you said, there's so much potential in it. However, there's also a lot of bearishness in it.
When Bitcoin drops, altcoins usually follow. Or rather, when Bitcoin takes a dip, altcoins can't avoid it either. Let's take another look at Ethereum and then XRP. Is it similar to Bitcoin?
Yes. We always keep an eye on Ethereum and XRP, hoping something will happen that we can highlight. We have them with us right now, just to be thorough. You can see the movement here too. You could compare Bitcoin and Ethereum. They're actually quite similar. What's interesting about Ethereum is that it's been in the same range for the past 2 years, between 2 and 4,000 US dollars. Between 2,000 and 4,000 US dollars, sorry. And we're right in the middle of that range right now. Sometimes it's a bit higher, sometimes a bit lower, but at the moment, it's almost right on point. And on the 3,000 line, so to move up, the dotted line is our first goal, and we keep at it until we break through the 3,450 point mark and are heading upwards. Maybe I should draw these green arrows here. They've been quite helpful with the chart.
What's up with spot ETH ETFs?
Rough week, $500 million out, 4 losing days, 1 positive.
All right, let's move on from that. Anyway, patience is key with XRP when it comes to the breakout. And like you've said a few times, if XRP breaks out upwards, it'll come from the bottom of the range. So anything could happen.
Yeah, it's not just patience we need here, but also some solid
Nerven angesagt.
I was about to say that I think you really had to hold it together over the weekend.
I'm optimistic. This range isn't that long, just a year between $2 and $3. That's our range. We've been saying this for months. It's a buffer zone between 180 and 2, and it should hold. If you look back, it's been hit a few times, like here and here, and right now we're back at that point. So XRP really tests your nerves. If the patterns we've seen before hold true, It's smack in the middle of the range at $3,000, between $2,000 and $4,000. It always starts from the bottom, and that's where it is now. Of course, it could break out. That's not a concern. But it hasn't broken out yet. And honestly, I'm actually hopeful that starting with the US indices, like we talked about through Bitcoin, the big altcoins, will at least hold steady and keep growing. Yesterday we saw that during this little rally, ETH and XRP really outperformed Bitcoin. It seems more money flowed into these two altcoins than into Bitcoin. And that's promising.
Is this reflected in Bitcoin's dominance?
Yes, there was a slight dip in dominance, which we actually want, but we want more than just a dip. We want a real downward move. But it would be over the top to say there really was one. So we're skipping the Bitcoin dominance chart, because the sideways movement isn't showing anything special.
Recently, we've seen we can't just apply old rules to today's market. This isn't just true for crypto, but the entire market. Those old market sayings don't hold up in today's fast-moving, geopolitically charged world. But you also think crypto rules like the 4-year cycle are outdated. Why, and what's your reasoning?
Well, we've already talked about the 4-year cycle so many times. I've never been a fan. I prefer to focus on what's happening right now. And why? Why do I see things differently than many analysts who focus on charts, and I'm not an analyst, mind you, who look at charts and predict what will happen next? I focus on the real happenings, the macroeconomic shifts. The crypto market has shifted drastically because big players have entered the scene. And I'd like to discuss one major player: governments. Brad Garlinghouse, Ripple's CEO, quoted Ben Bernanke, the former Fed chair, saying at a Ripple event that governments would rather deploy tanks than lose control over the money supply and financial system. That highlights how serious this is. A state has lost control when it loses control over its financial system, and they'd rather stir up trouble than let that happen. And this is the first big player to say that if the financial system is shaken up by new tech like blockchain and crypto, we need to keep control. Something new's on the horizon, but we've got to manage it, especially those following this government's lead. Besides the government wanting to hold on to control and their long-established business areas, of course, the big banks want to keep making money with loans, transfers, fees, and more. They're like, bring on the new tech. As long as they're in the game and benefiting, they're fine. So you've got these two major powerful players jumping into the crypto scene, which is super clear if you look at the Clarity Act and bank lobbying. It's hugely impacting the Clarity Act. We've seen how the banking lobby, through Gary Gensler and the SEC, tried for years to hold back blockchain and crypto growth. Now Gary Gensler's out. And they're all over the Clarity Act. As we talked about last week, they're pushing hard to include rules in the Clarity Act to stop high interest on stablecoins that aren't allowed.
There's no competition for the banks?
Since people would pull their money from the banks for better returns elsewhere, they're also saying loans shouldn't be issued using stablecoins because that's the next big thing that could slip away. They say they're fine with stablecoins.
but anyone dealing with them should act like a bank and be regulated like one. Getting a banking license isn't easy, as we've seen. Ripple has one, but it's been a long fight. This means they're obviously trying to block it, and the lobby is huge. You can see this in the Clarity Act. Quick note on the Clarity Act. The Clarity Act still needs to pass through the Senate, and there are two committees involved right now. The Senate Banking Committee and the Senate Agriculture Committee. They're working on it and have different markup schedules. I would say now it is quite a complex matter, and I don't want to go into detail here, but what happens with the lobbying makes it so complicated, with influences coming from different corners, still coming in. And you can really only hope that the Clarity Act comes through as soon as possible and that an agreement is reached. And now we've talked about the government, talked about the banks, and we also have other players on the investment side. Yes, so the big asset managers who are getting in, the big pension funds who are getting in, these are powerful companies that say, we want to be part of it too. And when so many new powerful financial players enter the market, it's obvious that the old rules from 2010 to 2020 or even up to 2023 won't hold. Big players change the game and say, okay, we're in, and the rules will shift. Naturally, market cycles, laws, cash flows, and relationships change. I think this is causing a crypto market reset, making old observations and patterns less relevant. I saw similar things in the Linux world. I was at CeBIT in Linux Park. There were just 5 booths, including ours. At first, Microsoft laughed off open source and Linux, but by 2006 or 2007, they became the biggest threat. Now, major open source projects, MySQL is managed by big companies like Oracle, or look at the phone, Android, with Google controlling it, and this whole movement with blockchain and crypto was exciting, but once big players join in, the rules change. It's a whole different ballgame now. It's not about idealism anymore, it's about making money. So, in my view, we need to realize that new players bring new rules, and that's our reality now. That's why I think the game is restarting. And you shouldn't focus too much on the past when trying to predict the future.
I've been to CeBIT before too, but while you were negotiating deals, I was earning money for my studies as a trade show hostess. Let's keep to the timeline and talk about your fun and colorful schedule. And you let us know. Come on, you mentioned in the last interview that we're slowly moving into the third area. We've pretty much wrapped up the first 2 big areas, but there are still some things that need tweaking or updating. What are those right now?
Well, about the first block, the major US indices, including Russell, are doing really well. I definitely changed the date. We saw them. I brought up the rattle at 2.7. I mentioned the DX2 that was set up at 97. That's why I haven't made 96 green yet, but I've already done the X and the Y. I figure gold and silver's parabolic rise will eventually reverse, which would be a great chance for our cryptos. With cryptos, we've tackled a whole lot of green as we've moved upwards, like we talked about. Right now, we're asking if this was a higher low and if the upward trend is still in check. I'm still for talking about a continuation.
toward new all-time highs around 140, 150, but we'll see. Down here, nothing's changed yet, as we mentioned, because the big guys like ICE and EXIP, though they've hit new all-time highs, only slightly above 21, aren't ready to take the lead from Bitcoin and kick off an alt season.
Today we've also got something for, let's say, seemingly disappointed and very energetic viewer. It's the portfolio we had back in summer 2024, in June, I think. This viewer was saying we absolutely need to bring back the portfolio so folks can see how big the losses are for those who invested in it. We've brought it back and plan to include it in upcoming interviews. Can you say a bit about that?
Yeah, we kicked off our interview series in May 2024, so it's been almost 2 years now. After the first couple of shows, we decided that so people could get a hands-on feel for the whole story. Join in and follow along. We launched a very conservative model portfolio, which we've refreshed several times over the past 2 years. This conservative portfolio had 50% in Bitcoin, 25% in, and 25% in XRP. So if you crunch the numbers as of 2024, anyone who invested and stuck with it from the start is up 198%, or about 200%, over nearly 2 years. And the best part is the gains are tax-free. So anyone who, I think that's pretty good. And during this time period, it can definitely hold its own against gold and silver. So from where I'm standing, I'm still pleased, and we're currently still in a correction phase. As you mentioned, we'll roll this out week by week. We won't be turning them green, they'll stay black. And as I've always said, if the plan unfolds as anticipated and things turn green in terms of content, as already hinted, we'll see much higher numbers in the next few weeks. If the plan doesn't pan out,
then not. Right now, tensions are understandably high among viewers and investors. It's about investments, money, and where things are headed. But it's important to remember that everyone has to make their own decisions. That's why we want to emphasize what this interview offers: facts, the current situation, potential future paths, and an additional layer of insight. How would you, let's break this down so you can make your own decision later.
yes, this is especially important to me because I believe many who aren't exactly our fans can't mentally separate these two pieces of information. We share two separate pieces. First, we lay out neutral, bearish, and bullish scenarios. I think that's been clear, even today. What needs to happen for things to improve? What are the indicators? What are the risks of things going south? What should be done then? Anyone who only looks at stage 1 of this interview series would think we're indecisive. They hear us say things could go up, down, or even sideways.
It can.
It can. There's a chance for anything, and we try to explain which indicators suggest which outcome. Based on what we present in stage 1, everyone loves profits at the end of the day, so they also have to be prepared for risk. I mean, to take the chance, you have to also be ready to bear the risk. Everyone must choose their own path and actions. That means considering our insights as well as others. And thinking, am I feeling more bearish, more bullish? Do I wait longer? Should I sell some more? They also need to check their tax situation. Do they have any losses they can carry forward? Do they have gains? Is it all taxable? So there's some math involved. Everyone has to figure this out on their own. We can only provide the foundation for a solid decision. Then comes the second round of information, which stands alone. At this point, I share which route I prefer, when and how I'll act. Of course, I look at stage one neutrally, pass it on here, and then think about what's most likely for me. What's my risk profile? How willing am I to stay fully committed? Others say they can't afford that. They need to withdraw a bit because they need some cash on hand. I've been considering it, and here's how I see it. As long as my rule of higher highs and higher lows isn't broken, and the US indices keep performing like they are now, I believe they're going up. I'm not asking people to follow me blindly, but instead, I'm explaining my thought process. Based on a realistic approach, that's how I think and how I implement it. If someone only takes phase two from this interview series, they'll pretty easily think, what kind of illusionist is he? Why is he so extreme? Why so risky? Why is he all in? He's a dreamer out to fool people. Yeah. Like the Pied Piper. That's what I do.
Can you play the flute?
Yes, back in third grade. That's key, Johanna. Everyone, and we got a request through our channel last night. And when I read the email, I thought, I already made this slide. That's exactly right. He wrote, we're the only community still optimistic. Everyone else is either pessimistic or unsure. And I say, yes, we're certainly a community for sharing information and opinions, but there's a limit here. It's something everyone must decide for themselves, where their own community is. I still think I'm optimistic. I believe we'll see the final surge in the coming weeks. Trump might ramp things up again before the midterms and keep things afloat. That's fine. The longer this run lasts, the higher it will go and the more profit we'll make. It doesn't matter to me at the end of the day. My second take, without wanting to boast or say, I know it all, you should follow me. Take two, I'm optimistic. I'm still going all in. I'm still heavily invested in XRP. I have to add that I've been in this for ages. So even if it drops another 50%, my portfolio is still in the black. The individual strategies, maybe someone got in at 150 or 210. They must think differently, but everyone has to make their own plan, and we can only offer suggestions.
If you're still in the black with a 50% dip, you can keep topping up our coffee fund with the phrase piggy bank. That reassures me, and I think it reassures Schwenky too. So it's absolutely clear from this slide that it's your plan you're sharing with me along with the facts, and it's not investment advice. I almost reached for my phone. It's not investment advice, just your journey that you're taking and sharing with the viewers.
If someone's in this market and questions themselves, what am I doing here? In the mirror, they need to set a boundary. Gather information, decide. I just say, this is how I do it. Nothing more, nothing less.
More info will be here at the latest next Tuesday when we meet up again. I'm curious about a potential partial shutdown and how the market will unfold, especially with the big US indices and the US quarterly reports. Thanks a lot for today, Oliver. Dear viewers, next week will definitely be a bit wiser than today. What's important is that we'll have you back here, and we can't wait.